Hi, good people. Okay, today I've decided to talk about money market funds. The other day I heard one of my friends asking about which is the best money market fund to invest in here in Kenya, and I thought, okay, maybe I should shed more light on the various types of money market fund that we have here in the country and the benefits of investing in the money market fund. Because it's like not so many people understand what we mean by money market funds. So I'll start by introducing what we mean by money market funds. Then I name the various fund managers that we have here in Kenya and their annual yield so that you can be able to do a comparison when you are deciding on which company to invest with. And with the money market fund, these are products that are being offered by various investment companies that are regulated by CMA, and we also have some banks which also have their own money market funds, and other insurance companies which also offer the same. So I'll start by explaining exactly what we mean by money market funds. And in short, money market funds are a kind of a mutual fund or unit trust product which offer which normally invest in highly liquid instruments, and some of these highly liquid instruments include T-bills, we have commercial paper and other debt instruments that are short term. So the main reason of investing in money market funds is whereby you have some cash and you don't have an immediate use of that money, so you want somewhere you can hold your cash as you plan for it, and at the same time you don't want your money to sit idle. You want to earn some return on your savings or investment, so that's why you end up choosing on money market funds. You can alternatively put your money in a savings account at any commercial bank, where most probably it won't earn you anything, but if you put that money into a money market fund, you'll probably get to earn a return on top, and the average return that you get to earn on money market funds are above the inflation rate, so at least you beat inflation by investing in money market funds. But if you just hold your money in cash, definitely, if we consider time value of money, at the end of, let's say, a year, your money will have depreciated in value. So it's always advisable to invest your money instead of just holding it in cash. So the main goal of money market funds is to help the investor to earn above average returns as compared to other investment platforms. Like when you put your money in a savings account, you also get to beat inflation. Like currently here in Kenya, the inflation is at an average of around 7% there. So if you earn anything above 7% on your money market account, then you'll be making a positive earning on your savings. So I'll just go straight to the key benefits of investing in money market funds so that you can be able to understand exactly why it's advisable for you to invest in money market funds. So the first advantage of investing in money market funds, it's where we talk about affordability. With money market funds, you find that most of these investment companies allow you to start with small amounts. You can start with amounts as little as 500 shillings. Like for the DigiTrust product offered by ICA, you can start with 500. You can do top-ups of as little as 500 shillings. And they normally don't have like a rigid frequency where you are supposed to be doing top-ups. You can do top-ups at any time based on how you earn or based on your own arrangement. So when you talk about affordability, you see anything 500 shillings and above, that's quite affordable. So unlike other products whereby you have to put in a lump sum amount of, let's say, 100,000 and above, but now for 500, and you can do top-ups at any time or for as little as 500, then that kind of a product is quite affordable to many. The second advantage we are looking at is diversification of the investments. Because I said money market funds are a kind of a mutual fund whereby they pull resources from different investors. You find like John is investing, we have Simon, we have Peter. They are putting in small amounts, but then they are investing the money through a fund manager who is licensed by the Capital Markets Authority. Then once the fund manager now receives the money from the different investors, and they have a team of professional researchers and fund managers, they'll now be able to decide where to reinvest that money in order for them to make a profit, which they'll use now to pay you your interest on the savings. So with them now benefiting from what we call economies of scale, they'll use now the accumulated savings to be able to invest in the various investment instruments. Let's say like the T-bills, or maybe bonds, or maybe go and purchase stocks which are listed at the stock exchange. So you see, they can diversify that money into different asset classes for them to be able to bring in good returns. The third one is whereby we talk about transparency. With money market funds, they are normally created by what we call a deed. And a deed is a contractual kind of an arrangement which governs the relationship between the investor, the fund manager, the trustee, and now the regulator, which in this instance is the Capital Markets Authority. So you see, we have those four parties. We have the investor, who is you, we have the fund manager, we have a trustee, and now we have the regulator. So when you bring together those four, and we have guidelines which now govern this kind of an investment, you see the trustee and the regulator, which is CMA, offer an oversight role on this kind of investment. So there's quite a lot of transparency. You get to understand the terms which govern your investment, and this kind of protects the investors. So you end up having your money being safe, and the fund manager can't make decisions which go contrary to what is stipulated in the Investment Act from CMA. The fourth point is the economies of scale. This is on the side of the fund manager. Once you mobilize those funds from the various investors, the fund managers now have enough cash to bargain for better returns on whatever money they are either lending out there, maybe through commercial paper, or maybe when they are putting into these T-bills or bonds. You find that once you have some good amounts, you'll definitely be able to bargain for better returns, which in the end now translate back to the investor in terms of the annual yield that you earn on your money market investment. The fifth one is about the professional investment management team, which now govern your investments. Each fund manager must be having fund managers who are experienced and qualified to run that kind of a fund. And with CMA being there, they ensure that each fund manager meets those requirements, so that you have chief investment officers who are qualified, we have fund managers, we have researchers. So a team of those people ensure that your money is managed in a very prudent manner for them to make a profit on your savings, so let's call it investment, so that at the end of your investment period you have your money back plus an interest on top. The other one is the ease of access of your funds. I said with money market fund, they invest in highly liquid instruments, some of them being the T-bills and maybe commercial paper. We have the listed stocks on the stock exchange. So most of these investment assets are normally liquid. You can convert them back to cash at a very short notice. So an investor can easily access their money whenever they are in need of it. So that is one of the key benefits of investing in money market funds, unlike other fixed instruments like when you put your money in a fixed deposit or a locked savings account where you have to wait until maturity for you to access your money. With the money market funds, whenever you're in need of it, you can just request for your money. With some companies, you just do a withdrawal on your end. For others, you have to put in an email requesting for a withdrawal. So I'll go to that later when I'm comparing the various companies that are offering money market funds. So money market funds, when you look at the risk profile of the kind of investor who is suiting this kind of profile, we are looking at someone who is kind of a risk-averse person who doesn't want to expose their investment to high levels of risk. Someone who is a bit conservative, they want to preserve their capital, but at the same time they want to earn some little interest on their investment. So I say little because we have some other investment instruments that can give you very high returns, like when you invest into real estate, you get high returns. Plus we also have some other debt instruments where you can invest your money and get some good returns. But for money markets, it's for people who just want to preserve their capital while they plan for it, and at the same time they want to earn something that is at least above the inflation rate. So that's where money market now comes in. So that is about the profile of the kind of investors who prefer investing into money market funds. So now I'll go straight to the various companies here in Kenya which are offering money market funds, and I'll start with Britam. Britam have a license to provide money market services by the Capital Markets Authority. So they have their own money market fund, which has an annual yield or at a rate of 8.47% per annum. So the good thing about Britam is that you can easily sign up for their money market fund by just dialing star 778 hash, and you'll be able to sign up. You'll be taken through those commands and you'll be able to input your details. It's mainly your ID, your full names, if you have a KRA PIN, and maybe some other few KYC details that you input, then you'll be able to start investing with them. The good thing about the Britam Money Market Fund is that apart from the 8.47% earnings, you'll be able to access monthly statements. They have an app which you can download from Google Store and you'll install on your phone so that you can be using it to monitor how your investment is performing. You can withdraw directly to your M-Pesa or to your bank account. If it's M-Pesa, it will take between up to a period of 24 hours and you'll be having your money in your M-Pesa. If you're withdrawing to your bank account, that one normally takes up to 3 working days. Then I'll come to the second company, which is now Cyton Money Market Fund. This one is being offered by the Cyton Asset Managers. It's also regulated by the Capital Markets Authority. For the Cyton Money Market Fund, you can start with as little as 1,000 Kenyan shillings. You can do top-ups at any time for as little as 1,000. You can sign up easily by just dialing star 809 hash. That one for Britam, I said it's star 778 hash. For Cyton, it's star 809 hash, and you'll be guided through how to sign up. Also, the details that will be required, it's just your full names, your ID, your KRA PIN, and you can later on send them other details via their email once you started the process. And the annual yield at Cyton, it's an average of around 10.5%, so it's quite good compared to what Britam are offering, because Britam are offering at 8.47. Cyton it's at 10.5. And looking at the data for the past like 2-3 years, you find that the Cyton Money Market Fund has been performing relatively well compared to the other firms. So I normally advise most of my clients to go for the Cyton Money Market Funds, even though some people keep on complaining, oh, Cyton has issues also. But you have to differentiate that Cyton is offering two different categories of products. We have the regulated products where money market falls, and they also have their private offering, which had some issues last year, but that one is being tackled. But it's so far the best fund when it comes to money market funds. They have an app which you can also download from Play Store and install on your phone. You can be able to monitor the performance of your account at any time. You can withdraw, and for Cyton, their withdrawals are instant. You get your money instantly. And if you're withdrawing to your bank account, that one also takes up to 3 working days for you to receive your money. For most of these funds do charge management fee at an average rate of around 1.5% per annum. So that one is quite in order. And some of them also charge withdrawal fee. Some offer you like maybe 2 free withdrawals within a month. Others don't have that option. You just get charged on each and every withdrawal that you make. For Cyton, the last time I checked, it was okay. It depends on the amount, but you could be charged as little as 16 shillings per transaction. Let's say if you are withdrawing 1,000 shillings. So you have to also check on the withdrawal charges. The third one, we are looking at ICA Lion, which had this product by the name of DigiTrust. With DigiTrust, maybe some of you have seen adverts on TV. You can start with as little as 500 shillings. Top up is also a minimum of 500 shillings. The annual yield stands at 8.34, which is way below that one of Britam, which was 8.47. Now for ICA, it's at 8.34 per annum on your savings. It also has those other benefits of withdrawing at any time, depositing at any, doing top-ups at any time. If you want to sign up via USSD, you just dial *793#. This is for ICA Lion, *793#, and you'll be guided through how to sign up for their money market fund. Then I'll go to these other ones. I'll just name them and maybe their annual yield. We have Zimere Money Market Fund, which has an annual yield at a rate of 9.56% per annum. We have Sanlam Money Market Fund, a yield of 8.86 per annum. We have CIC, which is the market leader in terms of portfolio. The size of their portfolio is quite big. Their yield is at 9.02% per annum. CBA, which is, for those who know NCBA, they have CBA Group Money Market Fund. For this one, the minimum amount you can start with is 5,000 shillings, and you can also do top-ups a minimum of 5,000 shillings. They charge a management fee at a rate of 2% per annum. Then we have NABO Africa Money Market Fund. Their annual yield at a rate of 9.23. This one is owned by the NABO Capital. You can find it at the International Life House in town, that is on 5th floor. So if you have time, you can pass by and talk to them about their money market fund. If you need it, you can open an account with them and be earning that rate of 9.23% per annum. Then we have Madison Money Market Fund, because I told you, okay, we have some of these insurance companies which also have their own money market fund. So we have Madison Money Market Fund with a yield of 8.6% per annum. We have Apollo Money Market Fund, a yield of 8.95% per annum. We also have another company by the name of Dry Associates Money Market Fund with a yield of 8.38%, but this one is for those high net worth individuals, because for them their minimum starting capital is quite high. So this one is targeting those high net worth individuals, that is Dry Associates Money Market Fund. Then we also have Cooperative Bank having their own money market fund by the name of Cooperative Coop Money Market Fund, which has a yield of 8.3%. We have Gencap Hela Imara Money Market Fund with a yield of 8.53. We have Orient Kasha Money Market with a yield of 8.16. Then we also have Old Mutual Money Market Fund with a yield of 7.2. So far, this one is the one with the lowest in terms of returns at 7.25. That is Old Mutual. Then we have AA, Kenya Shilling Fund, also with a very low yield at a rate of 6.71%. So those are the various money market funds that we have here in Kenya. If we can just look at the data for last year and we rank the top 5 or maybe the top 6, we have Saiton at the top with an average yield of 10.5. Zimele comes in second at 9.9. We have Sanlam at 9.3, Madison at 9.3, CIC at 9, and also Nabo at 9.1 there. So if you are looking at the yield, Saiton is the best. If you are looking at a very stable company, maybe you can go for CIC or the likes of ICA, and Old Mutual, because they have quite lots of assets with them. But in terms of return and what makes the companies to have differing returns, it depends on which kind of asset their money has been reinvested into. Yes, we said we normally reinvest in highly liquid assets, but then how you go about dividing how much of your portfolio goes into which instrument also determines how much you'll be able to earn in terms of returns. And also when you have a very huge portfolio like that one of CIC, then probably you might not be in a position to invest the entire amount. So whatever little you earn in terms of profits, you spread it over so many customers, so that one will eat into the percentage. But for companies which have manageable portfolios like Saiton, they are doing quite good. They have a very dedicated team of researchers, so their returns will always be good. And also the expense of moving funds from maybe one point to the other, it's quite minimal because they are not moving huge volumes, so definitely the charges are quite on the low end. So that's what determines the kind of profit that these companies can be able to make. So that was all about money market funds. So for anyone who is looking at saving their money somewhere so that their money is safe, but at the same time you can earn something on top, I'll advise you go for money market funds. Stop leaving your money in those savings accounts at the bank, because you won't earn anything on top. But at least for money markets, you'll be getting that 10% at the end of the year. If you have $1 million and you get 10%, see, that is like 100,000 in terms of gross earnings. Then the fund manager will deduct a management fee at a rate of 1.5%. Then also that amount will be subjected to another deduction of withholding tax at a rate of 15%, and you remain with your net of around 80 something thousand from the 100 that you earned on $1 million shillings. But if you had the same amount in your savings account at the bank, probably you won't earn anything at the end of the year. So which one is the better option? You either go for the money market or you just leave your money lying at the bank. And for those people who are looking at the safety of their money markets are very safe. CMA is there to make sure that these fund managers they invest your money prudently so that they don't end up losing your money. So there's no need for you to worry about the safety of your money. The same way your money is safe at the bank is the same way your money will be safe with these fund managers, because they also have trustees, which major cases are usually the same commercial banks that you are trusting with your money with. Because when you put money into any of these fund managers' accounts, it's usually held at the bank. The fund manager, their main role is just to make decisions on where to reinvest your money, but they don't handle the physical cash. Theirs is only to make decisions, then they authorize the custodian to release the money. But before the money is released, also the trustee are there to also ensure that wherever the money is going to will be going to add value to the fund. So it's a very good platform for anyone who wants to start this investment journey. You can start with the money market funds. Then later on, once you have enough resources, you can venture out into other options like the real estate. you can try debt or maybe these other structured products. So it's always good to do your research then before you make any investment decision. Thank you for viewing and see you next time. Thank you.